The stocks have just been buzzing. Max Financial, for instance, has returned 48% year to date. SBI Life, 30%. What is driving this outperformance in the sector? Does it have more steam? Let me go across first to Hersh, who's speaking about why insurance is having its moment in the sun.
Well, it's been a solid calendar year, frankly. Those returns that you just suggested kind of demonstrate that. And let's pull up the returns first. Just look at the top three there. 27 to 48% returns for some of the life insurers. So really standing out. And why is this so? And we've tried to contextualize this. Key factors which are driving returns. First is the low impact of implementation of surrender value norms. Now, this is a big one because what was anticipated as quite a large impact hasn't really transpired. And we've had now life insurance companies coming out and confirming that it's not going to be that large of an impact. They've adjusted prices as well, and that has kind of aided the overall environment. Second, there's no regulatory visibility with regard to restrictions on the banca channel of distribution. Now, again, this is a huge positive. There was some bit of headwind with regard to, or some bit of caution with regard to any restrictions on banca actually impacting life insurers, especially someone like an HDFC Life, SBI Life, who rely on banca in a heavy fashion, and a single bank or institution contributing to the kind of growth that some of these companies make. So this is a big one as well. The third one is average ticket size of policies have gone up, and this is because of the regulatory restrictions that have started to percolate through. There's, of course, surrender value. We spoke about that. So your average ticket size has gone up, which has led to decent growth. But what was anticipated is demand will come down sharply. That hasn't happened. Demand has sustained, and therefore your APE growth numbers, which will come up on your screen in just a bit, we've covered that separately, have also not reflected that. Now I'm talking about recovery of margins and product mix in Q4. We've seen that happen, that margins which were on a taper have actually bounced back a little bit. So Q4 has actually been positive with regard to product mix as well as margins, and that positivity is translating on the stock price. Fifthly, and most importantly, starting valuations were extremely low. Now let's pull the valuations up, and what you'll see here is your FY26 price to EV was just 2 times for an HDFC Life, while the 3-year average was around 2.5 times. That makes a huge difference in terms of the valuation re-rating that has played out. APE growth has been strong. HDFC Life, ICICI Prudential, some of the numbers on your screen. There has been regulatory easing, including 100% FDI allowed, and falling bond yields likely to aid embedded value as well. Let me talk about valuations today. The numbers will come up on your screen. That's how the valuations are stacked up today. And what are the average return expectations? Well, you have an LIC with the highest 13% return expectation, SBI Life with a 11%, HDFC Life with a 7%, and then the others are below 7%. So again, is there comfort? Well, at least analysts don't seem or suggest so outside of an LIC.